Okay, so the last question, so just based on the name, you can already see it's based on a CC. Now, a CC is very similar to a partnership. However, the fact that we've got members' interest and members' net investment instead of capital contribution, current accounts, and that. Okay, so let's quickly see what do they want you to do. For this one, they also want you to do the appropriation account. Now, appropriation account for a CC is we're working out what is the closing retained earnings for the members. Okay, so for a CC, you're doing a similar type of calculation. However, there's a few differences. So the first thing that is different for a CC is you start with your opening retained earnings, then you add or deduct the profit or loss, and then any CC specific expenses, and then you account for the information. Now you can see this is 10 marks, so it's not a lot of information that is required to do the disclosure. Okay, so let's quickly see what information have they provided to us. So the first thing they tell you, it was registered 1 August 2015. The founding statement of the closed corporation sets out the following. The nature of the business, a spare parts retailer, names of the members and the interest and contributions made on 1 August 2015. Then they give you the members, they give you the interest and the contributions. Now, if you add all of these contributions together, it should tie to what the members' contribution total is in the question or in the trial balance. Now, remember, your members' contributions is your physical cash that they've pushed into the CC. Your retained earnings is where all the movements, all the profits, or any money they take out would go to. Okay. When a member leaves, we would pay out their contribution as well as their portion of the retained earnings. Okay, so I'm just explaining this because the 2019 question, they've actually done where a member joins, but I also want you guys to go revise. If a member leaves in your textbook, they do question 6.1, shows a very nice example of the different methods of how a membership can be impacted. Please make sure you know that for the exam. Okay, then they tell you the retained earnings in the beginning of the year. So that is our opening balance. Now we want to work out what is the retained earnings at the end of the year. That is what our appropriation account is working out. Now, how we're going to adjust it is we know the profit recorded is 940,000. Now, profit is recorded on the credit side of our appropriation account. Income tax is an expense. It is deducted from our profit, so that would be debited. And then members are entitled to a distribution of profit. So that's how much is being paid out of the profit to your members, and then the rest is banked in your retained earnings for a later date. Okay, so that is the information we need to deal with. So I'm going to stop sharing this, and then I'm going to share the Excel file with you guys. Okay, so the first thing we said you do with your CC's appropriation account, step one, is you start with your opening retained earnings in the beginning. So the 236 that they've given to you is your first starting point. Then the second thing you account for is you go account for the profit. Now, because we had a profit, we are going to credit the appropriation account. If we had a loss, it would be on the opposite side. Okay, so that's why the profit is on the credit side. Then we said income tax is an expense. So we are actually reducing our profit and loss. So we need to now debit the appropriation account with your income tax expense. Now, I've written your expense, income tax, they accept that description as well. but the reason I've included expense is because you also get an income tax liability. So I just want to distinguish between the two. Okay, now the next step is we need to distribute 45,000 to each member. How many members do we have? We've got 3 members. Now, if we distribute money to them, we are actually reducing the profit or the amount that is moving to retained earnings. So that means we also need to debit the account with distribution to members, which is the 45,000 multiplied by 3, which gives you 135,000. And then the last step is now to balance this account. Now remember, the appropriation account will be 0 after we're done with our year-end procedures because it's a temporary account. So our debits need to equal our credits. Now how do we do that? We can see that the credit side is the bigger one. So we add up the accounts to get to a balance of 1.176 million. We transfer that to your debit side, so the left-hand side, and then we balance the account. The balancing figure goes to your retained earnings. So what we've done is we take the 1176, we've deducted the 260, we've deducted the 135,000 to get to a value of 781,000. And that is how you actually work out the appropriation account for a CC. Okay, that is it. Do you guys have any questions on the appropriation account for the CC? Okay, so I've got a question here. So they ask in the exam, can they potentially give you the income tax liability? If they do give you the liability, then you will have to look at what the opening liability is and the closing liability, and the movement would generally be a payment and the expense. Okay. If they do not have an opening balance and they only give you the liability, then it would be the same amount. Okay, but I don't think they will make it that complex. I think they will just give you the expense, but that is how you deal with it in the case of a liability. Okay, the guys online, do you have any questions?